and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts to help you better in all your stock-related queries. But before that, let's have a look at what the markets are up to. So, Vinny, we did start on the green footing. It was a good opening for the benchmark indices. We did drift lower and now trading almost flattish for the benchmark indices.
Almost flattish and near those, days low level as of now as well. Nothing exciting that has happened on this front. 21,710 levels is what the Nifty is at around currently. What we're seeing also that is happening in terms of the individual stock moves, what is it? That ITC is not doing well because of its numbers that we've seen coming in today. Other than that, what's not doing well is Bajaj Finance. A sharp fall that we saw in Bajaj Finance post its numbers as well. Obviously, a lot of factors that have come into play for Bajaj Finance as well. Reliance today is down 1% as well, more than 1% as well. So yes, heavyweight Reliance also is seeing a decline, and obviously that does pull the markets down as well. NTPC too, it was an inline set of numbers, a decent set of numbers, but despite that, we're seeing it's not holding on to any bit of a gain there. So yes, NTPC also in focus and seeing a decline today as well. But yes, that's how we are keeping an eye out on today in terms of the numbers for the companies, these companies that are buzzing in trade. Other than that, what's holding on to green today, whether you look at an ONGC, BPCL, those are managing to hold on to good gains as well. So yes, that's how the market in terms of the Nifty is looking like. Nifty mid-cap managing to hold on to some bit of a gain so far. So yes, Nifty mid-cap is managing to hold on to almost 0.1% in green. Small cap managing to outperform, and small cap is doing much better than the Nifty 50 as well as the Nifty mid-cap as well. IT, metals, media, all these are the sectors which are managing to hold on to some bit of a green today as well. So yes, that's how the market setup is looking like. Shrishti, as of now, nothing exciting, at least on the benchmark indices front, trading almost near the day's lowest point.
All right, so once again, oil and gas space taking the lead, but financials taking a hit, especially the Bajaj twins. But with this, viewers, let's move on and let's start taking all your stock-related queries. Just a quick note that in the first segment itself, we are starting because every day we get a plethora of queries by you guys. So let's try to get you an answer for as many queries as possible. Viewers, you can connect with us live on a WhatsApp number that is flashing on your screen, and you can connect with us live as well on our social media pages, that is Twitter as well as Facebook pages. And today, to answer you and guide you, we have two of our very special experts. We have Rajesh Agrawal on the fundamental side as well as Kunal Bothra is joining us on the technical front. A very good morning to both of you. The first query that I have today is coming from Gayatri, and Ashish, she's holding shares of IFCI and her average price is 24 rupees. She's a long-term investor. Any take on IFCI, because this particular stock was also seen to be moving in the recent past. So what's the fundamental take?
Good morning, Vinny. Good morning, Srishti. Good morning, Kunal. As far as IFCI is concerned, I think the kind of price action we have seen in the recent past is not justifying the kind of fundamentals it has. So what I would suggest is book profit around 58 rupees. That would be a prudent strategy, if not the entire quantity you want to book, but at least partial profit booking is advised.
We're coming in on IFCI, but Kunal, Ravi Prasad from Hyderabad has 50 shares of Persistent System at 7,840 rupees per share. What should they do with this? Should they continue to hold or maybe look to exit and book out their profits because they want a short-term target on this?
Well, short-term wise, maybe 8,800, 9,200 could be a broad range on target for Persistent. But I think on the upside and specifically on a medium to long-term basis, the charts are looking very attractive. The only concern with the stock which we can see on the daily charts is slight bit of overbought nature in terms of indicators, which means that maybe closer to 8,800 to 9,200 levels is where you might see an ample amount of resistance coming into the stock, and from there a corrective phase creeping into this name. So I would believe that should be a potential target range which you can keep for the stock.
All right, moving on to the next query that I have. And at this point in time, Kunal, what's your take on Divi's Lab? Mahesh from Delhi has written to us. Can he go ahead and buy Divi's Lab at current market price, maybe for the next 6 months to 1 year time period?
See, I would suggest not to do it. Looking at the current chart structure specifically for DV Slab, now there are 2 points. One is that the stock is now back below the 200-day moving average over the last 3 days, which is a definite point of concern for stocks which are reeling below their 200-day moving averages. They tend to fall more aggressively, and the correction lasts for a prolonged period of time. And the bigger concern is now on the monthly charts, where many of the technical indicators like MACD, etc., are now trying to break past the neutral line for stocks like Divi Slab. So that could probably be another concern, which means in case if the stock dips down by say another 150 points, it could actually open a fresh legs on the downside on the monthly time scale for Divi Slab. So I would suggest to avoid as of now. Maybe in the next 1 or 2 months, if there is a mild bit of recovery and the stock takes support at current levels and say comes back about 200 moving average, that could probably be a better zone as well as a time to buy the stock.
Rajesh, we have Sushant Gupta, who's holding 2 banks. One is Federal Bank at a price of 145 rupees and IDFC First Bank at a price of 86 rupees. What's the word on both these banks for the next 1 year? Should they continue to hold or maybe switch to something else?
Continue to hold both of them because both of them have seen good numbers in the past. IDFC First Bank is trying to increase their balance sheet size, the advances, decline, and deposits also. And Federal Bank numbers have also been good, especially the gold portfolio and all. So I think one can continue to hold both of them. And in Federal Bank's case, if it by any chance it falls to around 130, 135 levels, it's a good buy also.
All right, moving on to the next query. Rajesh, this one is on Zomato. B. Soumya has bought the shares of Zomato, which was one of the counters in focus on the back of a brokerage note today. And what's the view coming in on Zomato? Her buying price is 100 rupees, so already sitting at good profits in this one. But any targets you have on Zomato?
See, medium-term target for a medium-term horizon, we have a target of around 150 odd levels where we would like to suggest profit booking because, as you know, the numbers have improved, but not that exciting as this point of time because the profits which they have reported in the last 2 quarters were meager 2-3 crores, and unless and until some good amount of profit, a bottom line improvement is reported, I think holding for a long-term period would be a little dicey. 150 would be a decent level to book profits.
Rajesh, we have a query from KVS Money from Bangalore, and this is on the FMCG side. They have 2 companies, HUL as well as Nestle. They're holding HUL at a price of 2,240 rupees, while Nestle at a price of 1,738 rupees. What should they be doing with both these FMCG names? Continue to hold or maybe look to sell now?
These companies are for one's long-term portfolio. Both of them have good brand value, good product profile, and numbers have been good. Yes, actual numbers were depressing this time, but I don't think for 1 quarter or 2 somebody would justify these kind of companies. These kind of companies are for long-term portfolio. You can continue to hold and then buy on dips.
Right. The next query that I have is coming from Neha Kunal, and this one is on 2 counters. Firstly is SW Solar, which has been like every day we do see 5% upper circuit on this one. Her buying price is 359 rupees, and she also has MMTC from a price of 66 rupees. Wants a suggestion on 3 to 4 months target on both of these names.
See, MMTC could be in fact, both the stocks are a bit high beta, not just bit, I think maybe slight more high beta for themselves. But MMTC, I think over the last 3 months specifically has moved from 50 to 80, and the stock prior to that corrected from, I think, approximately 90 levels to 50, 55 odd mark. So that is a concerning point for stocks on a short-term time scale, because when the markets are a bit stretched, there could be a possibility that these stocks may go into a correction phase first and then get into a recovery. So you have to be a bit cautious over here. Best strategy for both of these stocks is to have a trailing stop loss on both of these names. So say by a margin of 7% to 8% from current levels is the best strategy to have a trailing stop loss and continue to ride the trend till the time your trailing stop loss does not get hit into these names.
Kunal, one more query that is coming your way. This one is from Tanya from Ghaziabad and it's on Campus Activewear. They're holding 150 shares at a price of 303. What should they be doing with Campus Activewear? But maybe look to add some more of Campus Activewear. Sell, hold. A time period of almost 1 year is what they want to hold on for max.
So, frankly, Campus Activewear is something which, we'd avoided because the stock had broken below the 200 DMA in start of 2023, I think Jan or Feb, when the stock was almost at 400, 420 levels. And from there, it's fallen down to almost 40% to 50% of the values from those 400, 450 odd mark. Now, even at current levels, the concern with the chart is that it's still reeling below its 200 moving average, which tells you that the long-term trend is still bearish for the stock. It's just that in the last 2 months, the stock has been a bit more sideways rather than just falling consistently. So I would believe that maybe it could probably get into a phase of a time-wise consolidation. I would definitely not suggest to add the stock at current levels, but what you can do is you can hold on to the stock at current levels and wait out for a breakout about 200 moving average, which is currently at 300 plus mark.
All right, so that's the take coming in on Campus Activewear. But with this viewers, it's time to slip into a very short break. Don't query where we'll be right back.
Thanks for staying on with us on Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries then. And Kunal, this next one is from Ramesh from Delhi. They want to know whether it's a good time to actually start entering Bajaj Finance now. At the current price, would you say it's a good buy or Tata Elxsi also?
Well, I would not suggest Bajaj Finance at current levels. Now, I understand that it's a high pedigree stock, but then just purely on the basis of charts, the stock in the last 4 or 5 days, when the markets have seen a good bounce, has been below its 200 moving average, and doesn't come as a surprise that the stock is now on the verge of giving a bearish crossover, the death crossover, which we call typically when the 50-day moving average breaks down below the 200 moving average. That could also indicate more pressure for the stock in the near to medium term. So I would suggest to wait out for this corrective wave to play out. Maybe the stock can come back towards 6,200, 6,500 kind of a zone if this correction accelerates for Bajaj Finance.
All right, Rajesh, the next query is related to the power space and especially the renewable power space. And since all these counters from the likes of PFC, REC, IRDA are seeing no stopping, Shaikh wants to know any of the stock that you like at this point in time, but for a long-term period. He wishes to stay invested for the next 2 to 3 years.
See, the names you said, PFC, REC, RED, the valuations of all of them have been stretched. They have been trading historical P at 4 to 5, and now the P's are very high. For IIDX, even more higher. So I would say wait for some correction to enter in these stocks. As far as renewable energy is concerned, I think the direct names like Tata Power or Borosil Renewables are better bets at this point of time than going for PFC, REC or IREDA.
Okay, Kunal, this next query is from Balan. They want to know on GAIL, ONGC, NTPC, they're making a profit on all this. So what would you advise? Should they continue to hold this or maybe book out profits and switch to something else?
I think continue to hold on. Depends on where you've bought, at what price curve, what's your time frame, etc. But my assumption is if it's a longer term kind of a holding for these stocks, then I think these stocks have shown exceptionally well quality for themselves in the last 6 months to 1 year. Many of these stocks have given breakouts of multi-year swing highs. Some of them are on the verge of doing that. So I believe that with this excellent momentum at the back, you should continue to ride the larger trend for the stock on the upside, provided you have that kind of a long-term time frame. There could be corrections in between for these stocks, but when you look at this in the context of the next 3 years to 5 years, I believe that these stocks can post some substantial returns on the upside for themselves.
All right, the next query that I have, Kunal, is once again for you. This one is from RK, and he's holding 3 names. Firstly is Oberoi Realty, where he's sitting at a profit. He didn't share his buy price, but just a few months back he entered in this one. But in the rest of the 2, that is DCB Bank and Data Patterns, he's at a loss. So what's the outlook going ahead? Should he continue holding all of these 3 names, or any stock that you like, that you suggest to move out of?
See, I think from the real estate pack, Oberoi Realty is, if in case you are making good profits, then I think it could be a good time to book out profits over here for the stock. Maybe not at current levels, but a bounce of another 3% to 5% from current zone could be a good zone to book profits over here, because my sense is that real estate stocks had done exceptionally well in 2023. The indicators are a lot more overbought for these stocks, which means we could be at a point where these stocks may stagnate or go into a price-wise correction for themselves. So buying on dips or trying to wait for those dips could be a good opportunity. In case if you spot them for stocks like Oberoi Realty, then I think that could be a good point to re-enter the stocks. In terms of the other two names, DCB Bank and Data Patterns, I think both these stocks are attractive in terms of the charts. DCB Bank is coming back closer to its 50-day moving average. So in case if it dips down to say 130 to 132 range, that could be a good point where you may look to accumulate or add further. And for Data Patterns, the support is around 1840 mark. So closer to that zone is where you can look to average further.
Rajesh, this next query is from Dubai, from Ephraim, and they're a long-term investor. They want to know from the long-term point of view, how is EPL looking? Is it advisable to buy right now?
Which one was said?
EPL.
Not getting you.
EPL, SL Pro Pack previously.
Okay, right. I don't think it's a good bet to go for EPL at this point of time. The numbers are not that exciting. It's not doing anything on the bourses also. So it's better to switch to some good names. Maybe in other sectors, IRCTC would be a better bet, or electro steel casting would be a better bet. Shyam Metallics would be a better bet to go in mid-cap space.
Right, so those are the alternatives other than EPL. But Kunal, the next query that I have is on, once again, a real estate counter, that is KNR Construction, wherein Anil has bought 1,000 shares at a price of 260 rupees, and the stock didn't show much of a movement. What's the outlook going ahead?
So again, my advice would be to try and book out profits for the stock. I think over the last 2 or 3 weeks, it's been trying to scale past about the 275 mark, unable to do it. Maybe in the next couple of weeks, the stock could probably attempt and confirm a breakout about 275 mark. So you may probably get a better exit point or a book profit point for KNR Construction. If you are a short-term trader, which I'm assuming is the case, then I think 290 approximately or 300 could be a good zone where you may look to book out profits for KNR.
Okay, do hold on with us, because let's get in some expectations coming in from the budget, right? Power stocks, they have been charged up on the back of robust demand. Anisha is joining you with us to tell us, ahead of the budget, is there any buzz in terms of renewables? Could it see a passive push? What's the expectation there, Anisha?
Well, power sector has been seeing modest growth over the last few years. We have seen that the budget for the power ministry has actually increased at the compounded annual growth rate of around 7%, and especially the push is coming in for the renewables, because the clip of allocation has been much higher there. In fact, if you look at the compounded annual growth rate for the renewable sector, that is around 19%. So clearly, you know where the focus of the government is right now. And they have done this through a variety of schemes which they have announced of late, right from a Deen Dayal Yojana to a Saubhagya to a Kusum, to the latest ones being on the green hydrogen mission, bioenergy, as well as the green energy corridors. A lot of these schemes have been announced by the government, which have been used to spur the demand and spur the infrastructure spend in the power sector. As a result of all of this, of course, these stocks have also seen quite a bit of a charged up move. Many of these stocks have actually doubled, tripled, and even become 4 to 5 times. Case in point being PFC, REC, which have seen a massive run up over the last 1 year. Even the likes of NTPC, SJVN, etc. The private names like JSW Energy, Tata Power, they've all seen a massive rally. And as a result of all of this, the market capitalization of the power sector has become a lot more meatier. There are companies which command market capitalization of over 1 lakh crore rupees as well. Case in point being Tata Power. You also have NHPC, which is very, steadily has been inching higher and now very close to the 1 lakh crore market cap level. Adani Power, a whopping 2.5 lakh crore almost in terms of the market capitalization. And PFC, REC too. But do remember, the valuations of these companies have also taken a bit of a re-rating. So not only the earnings have been doing well, there has been a re-rating of the entire sector, and the P multiples will tell you. For the likes of Tata Power, which used to trade at 25 times a year ago, it's now trading at around 37 times. Ditto can be said for SJVN at 38 times versus 17 times earlier. Adani Power 20 times now versus 13, and PFC, REC have been on a trajectory of their own. Their P P multiple has actually doubled or become more of that, and that's the kind of investor interest we are seeing in the market right now. But what about the way forward? Well, there's enough visibility going forward as well, and that's why you're not seeing any type of cool off in the stock markets. In fact, if you go by CRISIL's assumption, while between 2017 to 2023 we saw almost 15.5 lakh crore worth of investments in energy, it's actually expected to more than double in the next 5 years. And this is going to be much larger when it comes to the green energy, because over the last 5 to 6 years we have seen an investment of around 6.5 lakh crore rupees. That's expected to jump up all the way to 30.5 lakh crore, and that tells you that clearly the future and the future investments really lie in the new energy vertical. And the names of the stocks should come up for you on the screen as well, because there's a lot of ways to play the power sector right now, right from financiers to the cable manufacturers to the companies who are in wind and solar and other infrastructure, respectively. So a lot has been done in the power sector, but clearly there's a long runway of growth available as well. And these are some of the companies which will be in focus on account of that. With that, it's back to you guys.
Okay, thank you so much for that, Anisha. But on that note, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more after the break.